at ASX investment opportunities in review for the 17th of August. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances, and realise that not all investments are appropriate for every individual. Investor Signals provides a broking account service which incorporates our model portfolios across the ASX 20, 50 and 100, also covering the US S&P 100, as well as the ASX and US high conviction models, which picks up the ideas expressed in the blog and in our weekly webinars. Within the broking account, we can operate an independent portfolio where we work in partnership with you to execute specific ideas that we jointly agree on, and we have access to derivatives to enhance portfolio returns. So if you'd like to know more about the broking account service, please contact me 1300 614 002. The technology that I'm presenting tonight is the Investor Signals member area. You can subscribe to it for $1,320 for the year. And if you haven't already started a free trial, please visit investorsignals.com and the 30-day free trial is available. If you're ready to sign up and you'd like me to assist in setting up the 12-month membership for you, again, just call on the 1300 number. The table on screen, I'll just draw your eyes down here to 2020, and the Q1 earnings for this year came in at around $35. Q2 earnings, which is where we're coming into the tail end of S&P 500 companies in the US reporting their second quarter earnings. The summary of the numbers are that revenue's down around 10% on the same time last year, and profits down around 30% on the same time last year. So this estimate here of $30 of earnings for the second quarter looks like it's going to be about right. So the expectation for the market is that this is the trough or the low point, the second quarter, the June quarter earnings, and we see a 20% recovery into September and then a 30% recovery into December. And that helps to explain why the market is as optimistic as it is at the moment, is essentially it's looking past the current weakness in earnings. Where the risk to the market lies is that if this September quarter earnings doesn't accelerate 20% and we end up in a new normal environment where earnings are at a lower level than where we came into the pandemic. So back in 2018, 2019 earnings were 160. The market's looking for earnings to accelerate past that in next year up to $170 odd, and that's needed to justify the valuations that the market's at. But certainly this is where we are at the moment, down 30% on the same time last year, and obviously there's going to be a point where the market starts to get concerned if the deterioration in the global economic outlook doesn't support that base case that we get the recovery in the September and December quarter. Still an important indicator for us to look at when thinking about market sentiment is the technology sector in the US. At the moment, the Nasdaq is back above the short-term 10-day moving average. And as I've highlighted a number of times, it's not until we start to see that really roll over and a close below that average that it becomes the catalyst for you to be thinking about what strategy you have in your portfolio to profit from a down move in the market or to hedge your existing exposure. As I go through tonight's stocks, though, there's certainly a number of shares that you need to be cautious on, and there's only a limited number of companies that we're looking at on the buy side at this point in the cycle. And on that note, let's move straight into a graph of the Nasdaq and have a closer look at it. So we're seeing this strength where we've only ever had sort of 1 or 2 days below the average, and then the market's continued with the climb. But for the most part, the technology sector in the US is expensive by any measure and susceptible to a pullback. We think that the deterioration in the global economy warrants a risk-off period soon approaching in the market. But we don't want to be over leveraged to that sell-off until you really start to see this Nasdaq momentum falter. So again, use this as a reference. I'll highlight to you on the blog next time we see this close below. We had one day where it closed below and then it's jumped straight back above, but we want to see this roll over and price close below that for a number of days. And I'll keep you updated on the blog as we see that pattern play out. Going into the watch list, coming down here, selecting ASX 100, we get the percentage gainers to the top. We organise it in buy signals, so we're going to start by toggling through companies under buy conditions. As I get a certain way through this list, you'll see them switch from buy conditions into sell signals, and then I'll focus on the stocks that we're cautious on the short side. TPG I continue to like, and I urge you just to, especially for shorter term traders here, this stock's going to get into oversold conditions as a result of the weak numbers that Telstra posted and the soft outlook. That's contributed in part to the sell-off from $8 down to this $7.25, but there is a buying opportunity approaching here, and as I mentioned, especially for shorter term traders, watch these momentum indicators as you start to see it turn higher. But I'd be looking at scaling into this into two position sizes, a small amount tomorrow and then a second allocation to the trade if we saw TPG trade below $7, but I'm confident that you're going to see this get oversold and a buying or a trading opportunity from sort of roughly this $7 level back up to around $7.80. So keep that one on your watch list, especially, as I said, if you're a shorter term trader looking for something across a week to 10 days. Virgin Money, not doing there at the moment. Beach Petroleum, so delivered a good earnings result relative to, I guess, where consensus was. It was still down on the same time last year, but what the market's got excited about is their production growth outlook over the next 3 to 5 years. So Beach Petroleum, BPT, their support at 140. The stock price is above the momentum indicators, and we're looking for that to trade a little bit higher. Energy seems to be pretty well supported around that $40 level. JB Hi-Fi, good result today. I think there's still some concerns as to whether that positive momentum can continue over the next 12 to 24 months. A2 Milk, this has now been added into the model portfolios. It's under algorithm buy conditions. We've seen the short-term indicators turn positive. Support there at around that 1860 and a strong day today, so continue looking for that to move higher. Sydney Airports concludes the capital raising, I think a little over $2 billion. The rights issue closes on the 2nd of September. I was continuing to see uncertainty around travel. Analysts are predicting that Sydney may not reinstate their dividend until 2022. It's hard to obviously get a gauge on international travel or even domestic travel as to how long it takes for us to return back to sort of pre-pandemic levels. But Sydney Airports, we're comfortable with this as an opportunity on a valuation ground, but certainly reviewing that much more closely. NIB Holdings, not doing anything there, still cautious on the health insurers. CSL, we like this name. So buy level, I've been highlighting this on the blog. Again, we approach this from the point of view of allocating 50% of the position size now and then allowing another 50% to average into it if we see it sort of lower down around that 250 level there. But so just highlighting the sell-off in CSL to 270. We're comfortable adding that into portfolios at the moment. Ansell, not doing it there, see that as a little overvalued and we want to buy that on a pullback. APA Group, this is a defensive yield name, don't expect too much to the upside, maybe around $12 is resistance there or is full value. But as I've highlighted previously, they were growing earnings around 5-6%, and it is a fairly defensive yield opportunity in the market. The gold, again, buy the dip in gold. We see gold continuing to move higher. Preference is Newcrest, although we're still seeing fairly flat production numbers out of Newcrest. So with the other alternative, GDX, which is the gold ETF, but continue to remain bullish on gold and buy the dip. Likewise here with Saracen. AusNet Services, we've taken profit on this. So this was a stock that we bought around this 168 level. We've traded out of it at the moment. Expect to see it mainly move sideways, but Newcrest, I buy this on the dip, and I've been drawing your attention to this on the blog. So the range there is really, if we see it sort of within this 32 to 34 level, expect it to find support. Expect the short-term indicators to turn positive. And again, we're comfortable that the fundamentals remain in place to drive gold higher. Fortescue, iron ore prices starting to soften a little. Whether it BHP, Rio, Fortescue, bump up against resistance, we don't see any immediate threat to the downside there. Brambles at around $11, buy this, sell covered calls over it. Support there at around 10.50. So from a trading standpoint, if you see it pull back to around that 10.75 level, look to add that into your portfolios. Orica, so we've taken profit on this after owning it at lower levels. And again, these are all stocks that you can continue to hold from an investment standpoint. We think the fundamentals continue to support these stocks holding these levels or trading modestly higher. But if you're looking for opportunities in the market from a trading standpoint, and you've bought into this at this lower level here of around 15.50, our original target was $18 to $19, and we're sitting now within that range, so you could certainly justify taking some profit there. Spark Infrastructure is a new signal just generated today, so this comes back onto our radar, and I've just flagged there at around that 217 level there as support, and continue to watch those shorter term indicators. ASX, expensive relative to historical levels, and that's partly a function of it being a relatively defensive dividend yield play, but we've seen that dividend compress down to around 2%. We are expecting trading volumes to drop away a little, so the stock is expensive, but in an environment where obviously income or yield is hard to come by, ASX is reasonably well supported there. But just jumping back to that, it's certainly you can see the lower bound there as from a valuation standpoint back at around that sort of $75 level would be a good buying opportunity there. Flight Centre not there at the moment. Sonic Healthcare, continue to really like the story here with Sonic, but it's just too expensive up here at $34. We'd expect to see this shift to algorithm buy conditions on a pullback to around $30, so keep a close eye on that, and I'll update you on the blog. Next DC, cautious on this following claims around accounting, questions around the accounting that's been adopted by the company. Quite often, when we find these allegations are put forward within 6 months, we see a confession from management and a restating of the account. So we're a bit cautious that's the case with NextDC over the balance of this year. Dexus not doing there at the moment. ResMed, at 40 times earnings and a 1% dividend yield, the stock's expensive. I'd highlighted that we just want to be patient and see if we get a retest around this $22 level. So that remains the case. So we just want to see if we get another leg down, an algorithm buy signal, maybe some buying interest around that $22 level, and we're comfortable that the risk reward scenario there looks better with ResMed at that entry level. Ramsay Healthcare, so we've traded out of this, hit our target of $68. In a low interest rate environment, we think Ramsay's still a fairly safe place to park money to generate a 2% yield, but there's not much in the way of earnings growth, especially over the next 6 to 12 months. But buy it on the dip again. If we see it back sort of around this $61, $62 level, we'd be happy to buy back into that after generating about a 10% gain. exiting at $68. QBE Insurance not doing there at the moment. Westpac, it is the only bank that's under buy conditions, but we're still very cautious on the banking sector and looking for a better opportunity in the second half of this year. Afterpay, a little expensive up there where it is. Illumina, not really doing too much there at the moment. It's not one of our preferred exposures. And now we switch to stocks that are under sell conditions. So I'll just move through these and highlight the ones that we're focusing on the short side. So Altium, I'll update a post on the blog tomorrow following their earnings release, and we just start to look a little bit closer at the fundamentals within this business, but not doing anything there right at the moment. Qantas still cautious there on air travel, likewise with the property trusts. AGL disappointed with earnings down about 20%. Maybe copper's starting to underperform a little, and maybe Oz is getting a little expensive up where it is at the moment. James Hardie not doing there at the moment. Iluka, so resistance there at around $10 in Iluka. Centre Group not doing there at present. So Macquarie tend to feel that it's up against resistance up here to around this 130 level. Star Entertainment and Crown, this little bounce back that they've had, we're cautious on these names. Evolution, so preference Newcrest and Northern Star, Saracen, GDX within that gold play. Incitec Pivot, I'd been highlighting the likelihood that Incitec would break out to the upside. We've seen that, but as I've mentioned, our preference has been Orica over Incitec, and for traders we're taking profit on Orica. Investors can stick with it. Goodman Group delivered about 10% earnings growth, so came in above expectation. One of the real bullish signs was the expansion in their development pipeline. It was almost expanded by 50% on the same time last year, so that bodes well for the longer term earnings growth for Goodman, but the stock is extremely expensive up here where it is at the moment, and this is a classic name for you to keep on the radar. We will see a sell-off and an algorithm buy signal, and it's a stock that we'll buy on the dip later this year. Origin came off a little around the same time as AGL reported its results, but as I've maintained, Origin fair value's back at around $6, and we see that sort of reaching that level and trading sideways. Rio, BHP, Fortescue, comfortable holding those. Wesfarmers, interesting to review the result in more detail when it comes through, but looking a little expensive, but as I've maintained, fabulous business and good longer term growth drivers there in place, so comfortable with Wesfarmers, but just expensive short term. Crown and Star, cautious on those at the moment. Amcor, looking for this to run into resistance at around this $16 level. Medibank, again avoiding the health insurers. BHP up near resistance where it is at the moment, so we think BHP, Rio, Fortescue may be right at the moment, not under risk to the downside, but they are bumping up against resistance. Woodside Petroleum, a lot of analysts are fairly bullish on the valuation opportunity here with Woodside, especially if you take a 12 or 24 month outlook. So I just highlight that the shorter term indicators here, so if you're joining us for the first time, the primary algorithm signals are the red and green boxes, and then the red and green arrows are shorter term secondary indicators. So you can see here that whilst Woodside's been under algorithm sell signals, we are just starting to see the shorter term interim trend point a little bit higher there, but our preference is Beach over Woodside at the moment. Cleanaway, we really continue to like this story, but want to own it on a more substantial pullback, so we'll have a closer look at these earnings results as we come through earnings season over the next week or two. Santos, we've taken profit here after owning it at lower levels. We've sold out of that at around that 580 level. Vicinity not doing there at the moment. Cochlear, we're cautious there on valuation grounds. Insurance Australia, we've avoided this, and we can see the algorithm sell signal did a good job of highlighting the lower high pattern there. GPT trending lower. Boral a little bit cautious there, even though in general construction and new home build numbers look good. The index itself, I'll come back to that at the end of the recording. Mirvac, not doing there at the moment. Coles and Woolworths, we continue to like these as sort of safe haven yield plays, but they are getting very expensive where they are at the moment. We don't see any further upside. REA cautious on valuation grounds, and we see maybe a slight slowing in earnings growth for whether it's REA, Seek, Car, and they just all look a little too expensive as local technology play opportunities. So REA up against resistance where it is at the moment. Woolworths up against resistance but bumping sideways. So if you own this, sell covered calls, turn the 3% dividend yield into 8 to almost 10% cash flow from adding the call option over it. Stockland's not doing there at the moment. Suncorp's continue to remain very cautious on the financial services or the banks in particular. So car sales, they're up against resistance at around that $18-19 level, and I've just flagged on the blog a little like the Nasdaq. It's sort of pushing up against what may turn out to be a resistance level, and when we see this have a correction, we're certainly happy to buy into it at lower levels, but we'll wait for the algorithm buy signals. CBA, the result was pretty much in line with expectations, but you're seeing, Citigroup in the US undersell signals. You're seeing most global banks create these lower high formations, and we think the risks are building that there's further bad news for the market to digest on these banks as we come into the September quarter, so we remain cautious there. If we're looking at the technical signals, we can see there that we had the algorithm sell signal up the top here, and this has been a stock that I've been highlighting on the short side, and we continue to maintain that as a short position in portfolios. Horizon to 425 there starts to offer some yield support, but not much in the way of earnings growth. Oil Search we're not doing there at present. ALS, we've added this to our short list now, so we've built short positions in this at around this 890 level, and I'll continue to update you on the blog on that one. Cube Holdings not doing there at present, but it's under sell conditions. Likewise, Links under sell. Worley Parsons, we continue to remain on the short side of that stock, so resistance there at around that 890 level. Nine Entertainment under sell conditions. Telstra, so we're under sell conditions there at around that 350, 360 level. The earnings result was a little bit below consensus, but the guidance was what surprised the market, and the risk now exists that the 16-cent dividend may not be able to be supported. So we'd expect Telstra to trade down to around this $3 level, find support. It's a fairly wide band that I've identified here, but you'd expect to find Telstra to find support maybe just below $3 and trade sideways. We do think that there is still, even with a cut to the dividend, there is still some yield support there, and telecommunications still remains attractive in what could be a further risk-off period in the market approaching. So Challenger on the short side of that. Downer EDI not doing there. Preference of CIMIC over Downer. CIMIC there at around that $20 level, now trading $23. Comfortable there that's a defensive or relatively defensive opportunity given their exposure to government spending and infrastructure. ANZ not doing there. Our preference is on the short side of CBA and NAB within the banking stocks. WiseTech under sell conditions. You can see the algo sell signal there at 24, but it's not one that we're active in on the short side. South 32 earnings down around 40-50% on the same time last year, and no immediate catalyst to see those earnings recover. Xero not doing there at present. Computershare, initially this sold off on really, current earnings came in line with expectations, which are about 20 down about 20% on the same time last year. The company guided to a further fall of 10% earnings next year. Um, some analysts sort of see this as uh, there's really um, a division between the price targets here on Computershare. Some analysts see sort of $18 as fair value. We struggle to see where the growth comes from to justify that type of valuation. We continue to sit on the short side of Computershare at around that $14 level. But keeping a close eye on sort of the sentiment and any change to the earnings outlook there. NAB continue to remain cautious here. If we look at the algorithm sell signal, they're at around $21, now trading 17, so that's one that we've been on the short side of for a while. Domino Pizza's not doing there at present. Bank of Queensland cautious on the regionals. We don't want to be on the long side of those. Seek was a technology stock that I'd highlighted that we're on the short side of. We've now traded out of it and taken profit. Continuing to sit on the short side of REA and CAR. The issue for Seek there was, I think the warning was pretty clear when they cut dividends and moved quickly to raise to issue corporate bonds to shore up the balance sheet. So we saw that as a sort of pre-warning to maybe a soft result, and that's certainly the way it's played out. Seek is still a good business, so if we saw it down at lower levels, maybe around that $17 level, we'd take that as an opportunity to enter the stock. Transurban, we've remained cautious on this. It's been a tempting one to step into sort of this sell-off at around $13, but our price target was sub 13 before we start to have a look at this. It's testing those lows there at 13.30, so I'll highlight on the blog if we see this down around that 12.50, and we'll take a closer look at that on the buy side. Aristocrat, we sit on the short side of this. We think that the earnings continue to it's a difficult sort of environment for Aristocrat right at the moment, and the high PE valuation there is not justified. Magellan Financial, we got under resistance at around that $65, but we're not on the short side of that at present. Atlas not doing there at the moment. Ampol, fair value up at around $30. I don't have a specific date, but they've finalised arrangements to spin off their property trust into a separate listed vehicle. I'll update you on the blog with further details around that. But around $30 is simply just fair value for Ampol. Treasury Wines, slightly positive news flow out of China in particular. North American markets remain a struggle, but the stock is under sell conditions. It's not one that we're active in at the moment. AMP remains under sell conditions, as is Reliance. Bendigo under sell conditions, so continues to move lower, regional struggle, and then back to TPG. So what I'll do next, just to finish tonight, is just to summarise the opportunities that I've got on my watch list, and ensure that you are able to make a note of what I think are the opportunities to focus on in the market. On the ETF side, I continue to like the Global Infrastructure ETF, VBLD. This is certainly not a fast-moving, high-growth opportunity in the market, but I expect to see it to find support around that 52 to 55 level and gradually trade higher over the next 12 months. Brambles on a pullback to around that 10.50. That's still a buy on the dip opportunity. Bega reporting, I think, around the 20th. For the most part, for clients that we're running sort of more of a trading approach, we've taken profit on this after buying it at lower levels, picking it up there at around that 440 level. We've traded out of it at around the 470 on Friday. But I'd expect the upcoming result to be okay. So maybe on a down day tomorrow, you could have a think about adding Bega back into your portfolio if you're not already holding it. GDX, I highlighted on the blog here that the pullback to support that around 52 is a buy. It's had a strong day today, but we continue to see gold moving higher. TPG, I think there's a trading opportunity here, and you want to be buying this on the dip and trading out of it on a bounce back up towards that $7.80 level. The WDIV, not really, we'll have a closer look at that on a pullback, and I'll highlight you on the blog. Orica taking profit up here at $18 if you own it at lower levels. If you see a pullback back down to around that $17 support, buy back into it. I do think it maintains sort of that $18 to $19 price range, Orica. CSL, buy on the dip down here at around this 270 level. We expect that to continue to trade higher. APA, yield support there at around that $11 level, pushing up towards 12. Pro Medicus reports their earnings on the 20th. I'll update you on the blog. We'll have a really close look at those earnings numbers. But expect sort of this support around $22 to hold here. We can see the momentum indicators are trending higher, so comfortable with the setup there at Pro Medicus. Cure is a biotech ETF, broad exposure to S&P 500 mid-cap biotech stocks. It's corrected from $70 down to $58. I've created a fairly wide range here to consider entering this ETF, so it might be one where you think about breaking the transaction up into two tranches, where you're buying half the position size here at around $58. If it rallies back up to 65, simply trade out of it. But if you're adding half the position size at 58 and we see a soft market and it pulls down to 55, you might be willing to then add the second half of the transaction there and get a sort of blended lower average price into that Cure ETF. But I like the opportunity there. Ramsay Healthcare, as I said, for shorter term traders, we've traded out of this, so a pullback below sort of that $63 again's an entry opportunity. BBUS, now keep an eye on the Nasdaq. If it closes below the average, then have a look at your BBUS as a hedge to your long equity portfolios. This is a double inverse ETF, so it goes up in value two times when the index falls. So if the S&P 500 falls 1%, this will go up in value by 2%. So keep this on your watch list, and I'll update you when we see that Nasdaq close below the moving average. And likewise for the BBOS, which is the XJO equivalent, this will go up 2% if the XJO goes down 1%. The other hedge is the long Aussie dollar, and again, that unlikely to see that really move higher until we start to see that US equity market break lower and a risk-off phase develop. And ASX, most of these we've already covered. So Newcrest, buy on the dip between 32-34. A2 Milk, we saw a new algorithm buy signal there, supported around 1850. The iShares Global Healthcare ETF, this is one that if you're interested in ETFs, I think broad exposure to global healthcare is the right space to be in. We'd expect this to find support around this 100 level and gradually grind higher over the months ahead. Gold Road Resources, I like this within the gold space. So if you see this pullback, especially if we were to see a break below that 160 back down to maybe that 150 level, you want to be adding that into your portfolio. They're producing terrific free cash flow at the moment, and they've paid the debt down to next to nothing. Technology One's a new buy signal, so I've just highlighted their $8 support level. Keep, for traders, watch this one closely. If you see the short-term indicators starting to move higher, support there at around $8, but there's a trading opportunity there in Technology One, and there we are back to the beginning. So I'll just finish tonight with a quick look at the XJO. So still of the view that the XJO is likely to struggle with a resistance up there at around that $62 level, and that's largely based on iron ore prices up against resistance and not really seeing a catalyst to drive the banking stocks higher in the short term. So we continue to watch the Nasdaq, as long as that sort of holds above that 10-day average, we'd expect the XJO to keep bumping up against the resistance, but we'll certainly become cautious on the market if we see that technology index roll over, and I'll keep you updated on the blog. Thank you for listening in to tonight, and if you'd like to know more about the view on the market or discuss the technology that I've presented tonight, please give me a call on 1300 614 002.